Target reported earnings before the market opened on Tuesday, and results weren't all that impressive, but they also weren't all that surprising. Did give us a little bit of an idea what's going to happen with the economy, where people are pulling back, where there's some volume improvements, and where there's some minor points of strength. So that's what I'm going to dig through today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's dig right into the report. Just going to go through this infographic first because I think this is pretty interesting. Just from a high level, comparable sales were up 1.5%. So this is going to be a little bit lower than what we saw at Walmart. That's going to be probably the best comparison for Target. So no surprise there that things are a little bit weaker here because Target's going to be a little bit higher end consumer. If people are, which we've heard a lot of retailers talk about, they're probably not going to be the one that's going to be the beneficiary. It's going to be a company like Walmart. So no surprise that not a huge number in comparable same-store sales. But we did see traffic increase by 2.1%. So that means that people are spending less each time they go to Target. That is, I think, the big takeaway from the earnings report. The other thing is the one area of strength that they've had over the last few years is this digital comparable sales. This is their shipped business, their drive up, and their pickup business. So that's really a point of strength for Target. How long is that going to last? How long is that going to be relatively high growth? That's the big question because this was growing much quicker than this. It seems like we're starting to see that growth rate in the digital sales start to kind of level off. Does that mean that the Target 360 isn't quite as effective as it could be? I think that's probably the case. So let's go over to the actual earnings report. On a full year basis, net sales actually declined 0.8%. That's partly because 2023 had a 53-week year. 2024 is a 52-week year. This is one of those weird years that a lot of companies are having to kind of adjust their same-store sales numbers because not the same number of days or the same number of weeks based on how they're reporting. But fourth quarter comparable sales, like I said, up 1.5%. Trends in apparel and hard lines are accelerating by nearly 4 percentage points. So that's a pretty interesting data point there. Same day delivery powered by Target 360, up more than 25%. This is their product that should be a pretty big growth driver for Target, but I think has some implementation challenges. If you look at their comparison with something like Amazon, Amazon's really easy to work with. You don't have any of the sort of stickiness of, hey, do you want to tip your driver? The shopping experience is generally easier on Amazon. So they're moving in the right direction, but their app and their experience just isn't quite as good as it could be. The other thing is you have all this infrastructure in Target to actually have Target employees picking the shelves, and then a driver just come up and pick up the goods and actually deliver it to somebody. But I think what they're ultimately trying to do is say, hey, we want to offload that piece of the business to kind of a separate entity. It's actually their shipped business that they acquired. That's what they're running this Target 360 and their delivery service through. So it's a little bit separate, but it makes it a little bit convoluted and a lot less efficient than it really should be. Customers who are paying for Target 360, and I'm somebody who uses this on a regular basis, shouldn't have to have all the stickiness in the business. This should be something that's very easy to open up. I'm happy to hit a minimum $35 purchase, but then when you get the pop-up, hey, do you want to tip your driver? The shopping experience just isn't all that smooth. That's the things that are a little bit disappointing with Target as they try to make this digital transition. So I think there's a lot of low-hanging fruit there if management wants to make the difficult decisions to actually optimize the business a little bit better. But we'll see what they do over the next year or two. Profitability was pretty solid. GAAP and adjusted earnings per share, $2.41 per share at the high end of guidance. So margins are doing pretty well, and their guidance indicated the same. They're expecting their growth. They're expecting net sales to grow in a range of about 1% and a modest increase in their operating margin rate compared to full year 2024. Earnings per share on an adjusted basis, $8.80 to $9.80 per share. So if you look at where the stock price is trading, $117.14. As I'm recording just after the market closed on Tuesday, that means that shares are trading for about 12.6 times 2025 adjusted earnings estimates. That's a pretty reasonable multiple. And you see here, dividend yield is also 3.8%. So I think that's about where Target should be. This is not a big growth company at this point, unless they're able to lean into some of their digital advantages, but it should be a steadily profitable company. So thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. What I would like to see management doing now is actually reduce their shares outstanding in a much more aggressive way. You can see that shares outstanding, this is for the 3 months ended February 1st, 2025 here on the left. Shares outstanding starting to come down just a little bit, but that's a pretty modest reduction. Could be reducing those shares outstanding 5, 6, 7% given the cash flow that's coming in from the business. I don't necessarily think the target should be thinking about growing the business, but just how are you going to add value to shareholders at this point? Being the fact that I don't think there's any real strategic moves that they can make besides maybe getting more into the delivery business. Now, another thing that they have not talked a lot about is what is the future of. Now, one of the areas that they could potentially grow in the future is actually leaning into the drive-up business that they have today and autonomous vehicles. I think that's potentially some really interesting partnerships there as they start to, because they could actually be a place where you're utilizing some of those lower utilization hours for autonomous vehicles as they hit the market. That's going to be happening before you know it. So could that lead to better economics in the Target 360 business? That's something I'd like to see Target leaning into, but that's not typically something that they're going to be particularly good at. Like I said, the app, not the best user experience. They're also not typically the kind of company that's going to be a leader in innovation. But this is an area where you have a relatively slow growth company, but strategically, they're very well positioned with a lot of urban stores. You're going to have high supply of autonomous vehicles in a lot of the markets that Target is operating. So if you can actually lean into that Target 360 product, I think that's one way that they could really grow the business long term. But we'll see if management's able to do any of that. I think this was kind of one of those ho-hum earnings reports, but a pretty good valuation for the stock. This is one that I do own. Not really doing anything with the shares at this point because it's just too good a valuation to sell. I don't think Target's going anywhere, but I wouldn't be surprised if there's also management changes coming in the next couple of years. Their CEO has been there for a little while, and new blood could bring some new innovation to the business model. So steady as you go for Target at this point, but it always seems like they could be performing a little bit better with a little bit better thought through operations. But let me know what you think about Target stock today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.